Welcome back to the Master Your Money podcast with your host, me, Marini Jackson, your guide to mastering credit, building wealth, and creating financial freedom. Let's dive into today's episode. So, today we're talking about one of the most overlooked wealth building tools available to many employees, and that is your employer benefits package. Now, employer benefits packages can actually help you build financial stability. Most people only focus on their paycheck when they're evaluating a job. However, your benefits package can be worth thousands or even tens of thousands of dollars each year. Now, I know, oh goodness, I think it was a few years ago, my employer started doing this. They did what they call a total compensation package, and that they sent this, or they have this information available on their their website for like current employees, and it shows basically like this is your salary plus, and then it shows like, if you get any type of bonuses, and then like the actual like value of like your health insurance and all of these other items that they have available to you as an employee. And for some employees, they may say, oh gosh, I only make 55,000, but when they look at the total compensation, it can be, at some, for some people, worth like 70K rather than their base salary. Just giving that as an example. But when you maximize your employer benefits, it can help you build your savings faster, protect your income, reduce your taxes, prepare for retirement, avoid debt during emergencies, and create long-term financial stability. And some before we start exploring some of the valuable benefits and how to use them wisely, I do want to give this disclaimer as well. um, I am not saying like, discount your job. I'm not saying discount your entrepreneurial dreams or pursuits, but if you're someone who is currently employed, I know over the years I've seen on the internet people like bashing individuals because they have a job and they're not, they don't have a business. But at the end of the day, you need, finances, period. So whether that currently is coming from an employer, whether it's coming from a side hustle or several, or if you're someone who is an entrepreneur or self-employed, um, as long as you have income coming in that is paying your bills and taking care of you financially, that's most important. Um, Again, I'm not, bashing, anyone with a job. I have one currently as well. So we're gonna jump into, some of these benefits that, a lot of employers offer, and then talk about how we can use them wisely. So the first benefit that people often overlook is the retirement plans. So depending on the type of employer you are working for, that can be a 401k plan, a 403b plan, or a 457. So these retirement plans are some of the easiest ways that you can build your wealth automatically. And these contributions are coming directly from your paycheck. So before you have a chance to spend that money, your employer's already taking those funds out for you. So thank you, Mr. and Mrs. Employer, for doing that. So the benefits include, or why this matters is, like I said, you're 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 building wealth automatically. These contributions come directly out of your paycheck, so you don't even see this money. Like, you're making money, but you're not seeing it because it's automatically going to this account. So the benefits of that, excuse me, of those type of retirement plans include automated investing. You're getting tax advantages. Your employer, in most cases, are making matching contributions, and you're building long-term wealth. And the golden rule with this is, always contribute enough to receive your full employer match. And I know in some previous podcasts I've briefly touched on this, um, but you know some people, depending on where they are financially today, may not you know afford, based on their bills or their income or their financial situation, may not be in this place where they can necessarily do that. But when you can, always contribute enough to get your employer match. So if your employer gives you 100% match on that first 4%, for instance, if you earn, let's give a round number, $60,000 a year, uh, you're contributing, the 2,400, and your employer is, so you automatically get a 100% return on your money. So this is something very easy. I know, other people, with finances will probably say, you know, 401ks are bad, but we're building. Like if you just, for instance, I'll say if you just graduated from college or high school even, and you are looking to start somewhere and build yourself financially, those long term and work towards long term goals. With this as an example, you're actually, again, you're getting an immediate 100% return on your money. So, this is a scripture you can use, and this is from the New International Version of the Bible, or that version of the Bible. It says, "The wise store up choice food and olive oil, but fools gulp theirs down." So we want to be wise. We want to make sure we're storing up money, but we're not, devouring our money. So retirement investing reflects the wisdom of preparing today for tomorrow, because the day will come when you are no longer working, and your quality of life, I'm just going to be honest, is going to be dependent on your preparation and how you plan for that today. Some people, they may be blessed where they have family who can help take care of those things, but while you can, as you're in your income earning years, start planning and investing for retirement now, especially if you have a long time horizon. You can take these tips and then definitely start building. So the second benefit we want to talk about is your health insurance. Now, in the previous series about emergency planning, have talked about health insurance, and also the previous episode talked about your health and how that's part of your financial wellness. Your health insurance isn't just a healthcare benefit, it's financial protection. So without financial protection, one medical emergency can create significant debt. One of my gym friends, we were walking just after our camp that day, and she was just saying how expensive it was to have a baby if you didn't have insurance. Like, she was just basically saying when she was in her 20s, she and her husband were just getting started, with, building, their life. They had, recently gotten married, and then like maybe a year or two later had a child. And then there were some, I guess, insurance complications, and unknowingly at that time they just wanted to, take care of the bill, get the hospital kind of off their back, because they had a child to take care now. They put that medical bill on a credit card and spent many years paying that off. So You don't want to create significant debt for yourself. The financial benefits of having that health insurance is going to reduce your medical expenses. So imagine you're going to the hospital with no insurance versus going to the hospital with insurance. And you have like your deductibles, your out of pocket, things of that nature. But if you have no insurance at all, you're paying for 100% of that most of the time. Um, but the other financial benefits is you have access to preventative care. You have protection from catastrophic healthcare costs, and you have lower prescription costs because if you've ever read your um, insurance card or any bills, things of that nature, it says group medical coverage. And that means the employer, because there's a group of people getting this benefit, you take advantage of that group and get a discounted price that you're paying. So your action step for this week, or this, yeah, definitely for this week, is review your deductible for your health insurance, your out of pocket maximum, your network providers, and your preventative care coverage. And especially, I want to say this for network providers. Uh, for certain procedures, your doctor may be in network, but some of the staff that's in that room may not. I had that experience not once, twice, I think about 3 times, where like I was reading my explanation of benefits from my healthcare provider, and I remember going to have, whatever preventative care on whatever date, and then like it showed the doctor's name. I recognized that, but then like this other name, I'm like, who is that? And they're like, oh, that was the X-ray technician or whoever it was. So definitely check over those items on your explanation of benefits. Find out who's in network, things of that nature. And then this is going to definitely help you understand your plan and prevent those costly healthcare costs. Your third benefit you want to research or check into is the health savings account. And if you have a high deductible health plan, you may qualify for a health savings account, or HSA for short. Many financial experts consider HSAs one of the most powerful wealth building accounts available because it has a triple tax advantage. And basically, 3 things are happening. When you're making contributions to an HSA, you're reducing your taxable income. You're also able to grow the money in that account tax free. And for qualified withdrawals and their health related expenses, that money is, you're withdrawing that money tax free. So the long term strategy you want to use, and I'm looking at my notes on the side, is, if possible, contribute regularly. Pay your current medical expenses from your cash flow, and then allow your HSA funds to grow for future healthcare costs. And you also, I want to say this as well, you want to find out from your employer those if that account goes with you, meaning whether it's transferable, or because I know with the company I'm with, some people leave that company and they go work for other places, and you want to find out if you built that account. I know with the HSA that the provider that our company uses, or the company I'm with uses, uh, I don't. I need to find out too whether, but like you can invest. Or my point was, you can invest those funds in your account once it reaches a certain dollar amount, and this is why mentioning, you want to find out if when you leave that particular employer, you take those funds with you, especially like in my case, if you have funds and you're investing those funds to, potentially increase your the funds in your account. The fourth benefit you want to check into is whether your employer has a flexible spending account, and that's called an FSA. And flexible spending accounts, or FSAs, they allow you to set aside pre-tax dollars for eligible expenses, and it can be used for like medical expenses, your dental expenses, vision care, and dependent care expenses. So things like your child care costs, or if you have an aging parent and you're a caregiver, some of those expenses you can will qualify as dependent care expenses. So the financial benefit with an FSA is that you have a lower taxable income and you reduce your out-of-pocket costs. But you do want to be aware of any annual deadlines and any carryover rules that those accounts may carry. I know for some FSAs, they will basically tell you it's kind of a use it or lose it, meaning that every year whatever funds that you're contributing to it, that you have to use those dollars, and if you don't, then you lose that money that you've already earmarked, excuse me, for the FSA. And I know when I first started with my employer, I really didn't understand that. So some people are like, oh, they would go to CVS or somewhere and buy like a whole ton of Band-Aids and all kinds of like qualified medical items, so they wouldn't technically lose those dollars that they put into it. So definitely check into any deadlines and carryover rules. So the fifth benefit you want to definitely check into is your life insurance. Most employers offer or they provide basic life insurance at little or no cost. And this matters because life insurance protects your family, your loved ones financially if something unexpected happens. So, this coverage can help with mortgage payments, your funeral expenses, household bills, and education costs. So, you also, I want to say this about your employer life insurance. Review whatever employer coverage amounts to determine whether additional coverage is needed. So, number one, review whatever amounts. There are some employers who may say, we are covering, you know, at no cost up to your base salary. And then if you want to purchase more, then like it's, this amount of money. Your employer life insurance policy does not come with you when you leave that company. So this is something very important to note. Um, if you're someone who is more transient and know, like, I'm probably just going to stay here for 2 or 3 years and then you'll go somewhere else, you want to also explore having, an external life insurance policy. I actually have both. I have, one, whatever coverage through the insurer or the employer, and then I have, some external policies as well, because if I leave the company, I'm just giving, this is drastic, but I'm giving an example. If you leave the company today and then you turn in your badge, you're all happy and you're waiting to start your new employment, if you get hit by, if someone hits you and you unfortunately pass away, you're in that gap where you don't have insurance if you don't have another policy. So it's important to make sure you're covered no matter what. Um, I've also had a really close friend and mentor who, her manager, when we worked for this same employer, her manager unfortunately passed away. Like, he was on a business trip. He was like physically flying back from whatever business, meetings or meetings or location back home, and he passed away on the plane. So he was technically working, and yeah, so things like all kinds of scenarios can happen. So take advantage of the employer's insurance, but my pro tip is also have your own on the another freestanding policy on the side. So this is a scripture that you can use to basically to help you focus on this, and that is First Timothy 5:8, which says, "Anyone who does not provide for your relatives has denied the faith." And that may sound drastic to some people, but you want to make sure you're taking care of your loved ones. So you want to plan for your family's future. You GoFundMe is not a financial strategy for your life insurance. It's not. Um, People do it all the time. Unfortunately, they have these GoFundMe's. But I say if you're working for an employer, you at least start there. If and again, this whole series is build. We're talking about building our financial life. Um, the next benefit number 6, is you want to also find out about disability insurance. And many employees really, really, really underestimate this benefit. And this gives you the ability, you know, if anything happens on the job, you become disabled. This is, helping you still have that ability to have income. So your ability to earn income is one of your greatest financial assets. Disability insurance can replace a portion, is not always 100%. I can tell you that. Um, of your income if illness or injury prevents you from working. So ask yourself, if I couldn't work for 6 months, how would I pay my bills? Would I rely on my savings? Would I incur debt? Disability coverage helps protect against this risk. Now, I know with some employers, they may have long term disability and short term disability. And I know I've seen like on job postings or job descriptions where it talks about this is all you're going to do, and then it'll give you the descriptions of your medical, your vision, your 401k, your equity in the company, and that's like your stock in whatever company that you're working for. I've seen like the paid parental leave where it's like, a lot of companies are very progressive. It's either like maternity or paternity leave. uh, I've known like individuals, they've taken or they're on maternity leave, and they're taking like short-term disability, so they're still able to be paid. They're not, of course, getting 100% of their paycheck, but they're still able to bring income home while they're on maternity leave. So that's an example of the way some people use like um, their insurance or their leave. So the next benefit you want to be mindful of, and this is number 7, is your employee stock purchase plans. So I just mentioned how some companies will mention equity in the company. Um, some employers allow their employees to purchase stocks for that employer at a discount. And the advantages of this is you can use this as a wealth building opportunity. It's automatic investing, and like I said, discounted share prices. So let's say you work for, I don't know, Amazon or Google or Apple or some hot company, and let's give an example of their stock price is $500 a share. but you are an employee of said company and you can buy it for 50. I don't know if those deep discounts exist. If you know that's a company that you hear about all the time, if I were an employee, I'd definitely take advantage of that. So you want to avoid having all your wealth tied up in one company. One thing you're going to hear as you grow financially is, diversify. Don't have all your eggs in one basket. And I will, echo that as well. Don't keep all your money in one basket. Definitely take advantage of, buying the stock at the discounted price, but you want to balance that company stock ownership with other diversified investments as well. Benefit number 8 is, and we're gonna make this one the last one, but I do have a bit more, is your employee assistance programs, or EAP. And many people overlook their EAP entirely. They just, I want to make my money and I'm good. But these programs can include things like financial counseling, mental health support, legal consultations, family resources, and stress management assistance. And when you use these services, they can prevent those small challenges becoming financial crises for you. And I can honestly say, out of those things that I mentioned, I have used all of them over the years with my employer. Now, things such as the financial counseling, the actual provider of the 401k, uh, they offer a slew of opportunities for like financial workshops, whether you want a live workshop or a pre-recorded one. They're great with that. Mental health support, if you need counseling, if you're going through any type of challenges. A lot of EAPs will offer a certain number of sessions for or complimentary, like let's say 8 or 6 or whatever your employer has, and that can be an opportunity for you to talk those things out. Sometimes just having a listening ear, a sounding board, and sometimes we talk ourselves into our own solutions, but just having that listening ear. But that's a great way to take advantage of that service and more. So I do have several more, but we're going to stop for today because I know that was a lot. And I want to challenge you, think about what financial resources or what opportunities in my employee benefit package do I not take advantage of that may assist me. So that is your homework today. Think of one of those advantages that you may not know of and you're not taking advantage of, and it could be because you're not aware. So I hope that this episode has truly helped you and that you will again go look at your benefits package, talk to your benefits provider, and you may have, maybe sitting on a gold mine and didn't know the resources you have available to you. So if this episode has helped you, leave a comment below, like and share this podcast as well, this episode, and invite a friend who wants to be on the road to financial freedom as well. And if you're ready to take the next step, then also check out my website, www.virtuefinancialsolutions.org. And there you'll learn more about my programs as well as valuable resources to help you in your financial journey. So remember, until next time, we don't just manage our money, we master it.